Hey, good morning. This is Jon Johnson with your weekly mortgage and real estate market recap. All right, so rates have been they're always a big topic, but they're definitely a big topic over the past couple of days because new inflation came out, reports yesterday. Uh, Many different things affect inflation, or many different things affect mortgage rates, but inflation is the biggest driver of mortgage rates. And inflation numbers finally came down something significant. There's a couple different reports, but one was about 0.3, another one was a little bit higher than that, which gave the market a very big boost. Stock market jumped, I think, over 1,000 points in the S&P. Mortgage market jumped up as well. So all the markets look good, and so rates came down to under 7% for the first time in a little while. What are the news saying about the rates? This is very important because this is what informs buyers the most. The news is not always correct, but this is what's going through the head of many buyers when it comes to mortgage rates. So these are the top three news that I was able to find. Mortgage rates fall sharply to under 7% after inflation decreases. Today's 20-year mortgage rates falls to 36-day low. The latest mortgage rates are now 6.91%. All of that stuff is just headlines to be able to get someone to click on the article. But overall, though, it is a very good sign um, that rates are going down right now because inflation did come down. Uh, the news is correct, and buyers may be getting more motivated for the market. If not now, definitely for the springtime after we get through the holidays. NAR, National Association of Realtors, and MBS Highway Data. These are some of the two biggest people that put out information. NAR puts out information on the real estate side. MBS Highway puts out information on the mortgage side. Um, and they're showing that inflation dropped from 8.2% to 7.7% in one report. And a different form of inflation dropped from 6.6% to 6.3%. So either way they're measuring it, inflation did drop. This is the main driver of mortgage rates. And so with that, people are feeling more confident about the economy and more money is being pumped into certain things like these long-term S&Ps and also mortgage bonds. So good thing for rates. One thing to know, I can co-host events and home buying classes with you. So if you need any assistance with that, just let me know. I can come to office places, things of that nature, weekends, etc. Uh, Niche products right now are becoming uh, very big to get people under contract, to get them closed, etc. Rates are still not astronomically high, in my opinion. Many real estate agents who have been around for a while can tell you that they've seen rates in tens, the 12s, and there's even some that when they started, rates were around 15, 16, 17%. So still not astronomical rates yet, but it is high enough to where people are considering a lot of different products to be able to get them into homes. Those main products are going to be ARMs, so 5/1 ARMs, sometimes less. I don't recommend less than 5/1 because you keep your rate for 5 years. After that, you can only adjust 1 year, one time a year. There's also a cap on how much you can adjust, and you can refinance before the 5 years is over. So that's a product that I recommend for people who are trying to be savvy about rates. Everyone's hearing about this 2/1 buy down. Just to understand that it's just seller credit. Uh, so you normally can get seller credit, and it's normally mentioned towards getting buyers' closing costs down. So if the closing costs are 20,000 or cash at close is 20,000, you can get 5,000 in seller credit to get it down to $15,000 cash to close. But you can also use that seller credit to buying down the rate. So let's say we're using that same $5,000, but instead the buyer is more monthly payment conscious. They want their monthly payment to be lower. You can use that to be able, instead of having a 7% mortgage this year with a 2/1, the first year is going to be 2% less. So it'll be about 5%. The next year is 6%. And the next 28 years is going to be at the 7%. Once again, this buyer can refinance with this product as well too. So those are the two main niche products that people are using right now to try and solve some of this rate crisis that people are having. But there's also a ton of other different creative financing that is out there: bank statement loans, VA loans, of course, down payment assistance programs, investor no-doc loans. There are a ton of different products that people can be able to use to be able to get into homes. Down payment assistance programs, once again, these are always great for first-time home buyers, and the rates on these programs are actually a little bit cheaper or a little bit lower right now than many of your main rates they would get in a normal FHA or conventional loan. So I'm recommending these to a lot of my buyers. They're getting at the low, probably about $10,000 towards closing. At the high, with the Hometown Heroes program, they can get up to $25,000 depending upon the purchase price. I'm highly recommending this loan. It's closing in 30 days or less. It's pretty easy to close. I know my team, we closed a ton of them. So if you ever need assistance with that, just reach out to us. And as always, I'm available on weekends. If you have any questions, give me a phone call, shoot me a text, shoot me an email. I'll be here to assist. Thanks. Have a great weekend.